What's going on, guys? It's Garrett here. Hope everybody's having a fantastic weekend, or had a fantastic weekend depending on when you're watching this. Hope everybody had a great day and a good relaxing weekend no matter what you did. We're back here with our second weekly preparation video. Now this is going to be the last time that this is a recorded segment, okay? Usually this is going to be brought to you, like I said, through a live webinar segment held on Sundays at Sunday evenings, where we can come on and we can basically plan out our entire week as a team together, where we go through fundamentals, we go through charts, and we look and see basically what's going to happen and basically how to approach the week with the safest approach possible. You know, because just to kind of build up that teamwork and act as if we're working together. Whenever you guys can be in the chat and stuff, you can be asking me questions, and we can be working together in a more teamwork-like fashion. But as of right now, the biggest story of the day is the French election. Okay, now I don't want anybody to get ahead of yourselves, because don't forget, even though Emmanuel Macron, who is I'm not so up to date on every part of their election. Emmanuel Macron is the left side candidate. He's the Democratic candidate for France, and Marine Le Pen is the Republican candidate. But Emmanuel Macron is projected to win 65% of the votes against Marine Le Pen's 34%. So don't forget, these are the same exact exit polls that projected Hillary Clinton had a 98% chance of winning. So I mean, if there's anything that me and you learned from this past election in the United States, it's to say screw the polls. We need to wait until we see the real result. Everything is projecting Emmanuel Macron, but you never know what's going to happen. And they have a whole different system. They don't have an electoral system. They have they just have a majority vote system. I mean, Macron is projected to get 65% of the population votes. Which is a pretty heavy majority. But anyways, I'm going to wait till the actual result comes out, when it's real, everything's counted, and it's said and done. I have no interest in trying to project an election, no matter what exit polls say, especially after this recent U.S. election. I mean, there's no way to predict anything, no matter what the polls say. It's better to just wait. So I think that the best way to approach this would probably be just be careful, be safe, reduce your risk, and possibly don't even trade at all. Just sit back and watch and see what happens, because the uncertainty in the market is it's there. I mean, it's present. People are there's fear in the markets, and nobody really knows what they want to do during an election time. I mean, if we look back at the United States, let's add the symbol here, and what happened during the U.S. election. You can see nobody knows what's going to happen. I mean, Hillary Clinton was thought to win. Donald Trump came in the lead, and boom, you got a major whiplash. Okay, so that's just an example of what can happen during a time like an election, a presidential election, especially, since France is still remaining in the European Union, and Emmanuel Macron is a believer in the European Union, so they will never. The idea of an exit is probably out of the mix for them. But Euro USD is definitely the main watch tonight. But stay safe in the markets in terms of trying to play the election, because there's guaranteed to be gaps. Most likely, if Macron wins, you'll get a gap up. If Marine Le Pen wins, you'll get a major gap down, and the euro will be absolutely killed. It will be pummeled. But we'll have to see what happens. Okay. Once again, no predicting on my side. It's just it's a very difficult thing to predict. But let's go over a recap of what we were looking at last week at this exact same time, and what we were going to be thinking in the markets. So this entire week was the same as the week before. We had a ton. Let me get this out of the chart here. We had a ton of consolidation this week, and we had a breakout. Last week, you guys, on our weekly prep webinar, we said, okay, we're either going to wait for a break of the 108.50 area, or we're going to wait for a break of the 109.50 area. And we broke 109.50, and you can see here, if we zoom in even more on this range, because this is the big picture right now. We actually broke out, retested on this wick here. This was called in a video watch list. I called this retest and a possible long. So if you got in at 109.50, you're up anywhere from 50 to 60 pips. And depending on if you're holding, if Emmanuel Macron does come through and win, you could have nice profits in there. Okay, and that was called on those video watch lists that I do every night, guys, with the Elegante FX members and our team. And it's a great way to express and show you what I'm trying to trade without just doing a document or a couple of pictures. And I think people understand it much more in depth. So good job to anybody who did get a chance to get in long here. But remember, we discussed that if we break out at here, we should look for a test of at least the trend line. Okay, before we can get through that, before we can get up to this next market structure level at 111.40. This trend line is stopping us, and depending on how big of a break we get of this trend line, this is a weekly trend line, by the way. Depending on how big the break is, if we break nicely, we could test it within the same candle. If we don't break, with a huge candle, we may, it may be a slow ride up to the 111.40. But we got the first step out of the way, and that was breaking up above 109.50. Bollinger Bands are opening up and expanding, with the bottom one coiling upwards as well. So it's showing that volatility is definitely showing signs of upwards as of right now as we break this range. You can see on the 60-minute, it was just a constant range after this gap up, after the first election polls. The first results, or the first, they have a weird election system, at least in American standards. I have no idea. They have like 2 rounds and something, it's not just all one day, which just confuses the hell out of me. So we're going to have 2 major gaps in our charts right now, and it's one here, and it's going to be one at market open here in about 3 hours. So once again, guys, stay aware, stay safe in terms of that. But yeah, that's something that we teach here at Elegante FX. We teach it's such a different style in our courses and in our video lessons that we give out to our members every day. We have to stress the ability to adapt, and a lot of other services out there will teach you, oh, you have to do this, you have to do it my way, you have to do it this way. And if you don't, you're not going to be successful, you're not going to make money, which is just total BS. And we have a goal of creating self-sufficiency, no matter where it comes from, with the help of our courses, our video lessons, and our help to you every single day. And we don't think that it has to be this way or that it's all about the money. It's more about the returns and the percent and the risk management and the quality of trades that you're taking. Just giving people a lot of reality checks in terms of what they've been exposed to over social media about the past 2 years with this whole MLM boom, and reality. All right, so let's check up on Pound USD. So this pair, you guys, what we talked about was not only this amazing call that we had in the Pound USD. We called this once again on a video watch list. Free members, you saw how that was done. And how it was done in real time. But basically, to recap, what we were looking for was a break. We saw that we broke this high right here at 127.60, which was the 5-month high on Pound USD. And we broke it nicely. This was a thick candle here that we had. And then we went into a consolidation, into a range here. And within about, right here, we had about a nice about 4-day rally. We can get these arrows out of here. I don't need those anymore. All right, and you see we had this about like a 4 or 5 day rally that was just, it was bullish. It was slow, but it was definitely bullish, and then we broke out, and then we kept going. So what our scenario was here, guys, was it's going to be a slow, and it's going to be a bullish ride up to 134.60 if we broke out up here, and if we came back down in here, we might retest some of these lows in here. But we broke out, and we had trouble with this retest. We have this retest here, and we had trouble with it. All right, so and what I mean by that is we retested, we went up. You'll see it better on the 60-minute. You can see we retested, went up, retested, went up, retested, went up. And I had suggested longs at 129.50. I said I was going to be taking longs near 129.50, or entertaining the idea. And there was some drawdown on that idea, which is once again I have no problem admitting. But which is drawdowns are not bad if they're managed drawdowns, and if as long as they're not overextended, you're not going against your risk plan, and as long as your money is safe and you're not holding pure out of emotion, then that is okay. But we had that break in structure here, which was a bad sign to me, so I closed half my position just to minimize losses in case we did keep going up. And I actually closed most of my position at break even just to get out because it wasn't the price action that I was looking for. But we're going right back up, so I don't know if any of you did hold, but if you did hold from 120, not the 129.50, the 129, if you did hold from 129, you should be up anywhere from, about 80 pips. So if you did hold, good job to you, but don't get blinded by the profits. For a fact, if you went against your risk management strategy and you went against your plan on that trade, that I'd be giving you a slap on the wrist. Because that's not what we want. That's not a good habit to get into because it can be a detrimental. It can make a huge impact on your accounts and not a good one. But anyways, so going back out to our daily chart, our long-term chart. It's just basic price action, you guys. We had a thick breakout here, nice breakout candle, retested, consolidated, broke out, retraced, boom, and we got a nice rally here. And now we actually formed bullish market structure. We closed above this high right here, this swing high, see lower high, higher high, lower high, swing high as well right there. We broke above, what level is that? We broke above the 129.65 high, and we closed on Friday. So what kind of has me a little bit worried is if you can look at the Bollinger Bands, you can see how they're coiling in at each other, or it looks like they're beginning to kind of coil in. Look at this Bollinger Band kind of starting to coil in. It's not straight up like the Euro USD was. See how the Euro USD is pointing straight up. Pound USD is it's kind of coiling. See what happens whenever that starts to happen is when you get a coil, you get tighter price action, and then you get a breakout. Well, that's something that might happen again here if you look back here. Once again, boom, you got tighter prices, boom, 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 breakout. Tighter prices, boom, 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 breakout to the downside, but it was still, you get what I mean. Tighter price action, and then you get a nice, decent volatility spike, which could be coming soon, but we still have that bullish market structure in place. And remember, guys, I am a huge market structure trend following trader. So, if you have buyers consistently present in the market, which we saw it with the breakout, we saw it with this breakout, and now we're seeing it with this higher high being formed on this lower or on this higher low. We have no. Just look at the chart. We have no reason to believe that price is going to go down. We have We have one reason to believe we might slow down and maybe go sideways, or our rallies may be a little bit shorter, or our daily ranges might go down. But it's a basic price action. We broke out of this market structure high, the high, and then look. Our next market structure area is this top of this range, not this area, not this area. This will probably pose some resistance, which I'll talk about tomorrow night on our video watch list. But as of right now, the ultimate goal is that 134.60 area, and with original entries at 129, that opens up room for 560 pips in profit, which is a fantastic trade. But it'll take a couple weeks to get there for sure. But as of right now, pound USD, we are bullish. Why? We broke out, origin low, higher low, or higher high, higher low, higher high, higher high, higher low. All right, just basic market structure. And on the long term, 134.60 seems like a decent target. And depending on what happens there, if we break out there, then then we'll have to go from there. But we're getting ahead of ourselves. Let's just focus on this as of right now. But as you can see on the smaller time frame, you could have just played the break on this trend line right here that formed. You could have played the break of this market structure, this bearish market structure here. You could have played the entry on this candle, on the break of that counter trend line as well. Because overall, even though we did form bearish market structure here, we were bullish because we hadn't broken this low. All right, market structure is very simple. And it's something that I live by as a trader. Price action is just what I live by as a trader. I think that's all you need to really make a killing in the market. But anyways, let's go to dollar yen. So this pair is interesting, and it's interesting for many reasons, because something suggests it looks bullish to me. If you just look at it here, we had this. Oop, don't want that. Look at this rally. Insane rally. Straight up for multiple days. Barely any down days. Almost 90% green candles right here. Okay? We pose a three-wave correction right down to the 50%, and we formed an A to B equals C to D trend line, or move right here. A to B equals C to D leg on that Fibonacci extension from here to here. If we go from here to here to here on your Fibonacci extension, the equal leg is right there. All right? So, with that being said, I mean, we saw that rally here, but we also are stuck within a channel. So you can see from here to here to here. We've now touched this twice and 3 times. It's a nice channel. But we broke out, and I was talking about if we broke out of 112.20, look for a possible rally up to 115.50. What my problem was I was getting ahead of myself, and I wasn't considering all the aspects. I wasn't considering the fact, okay, we do have to break out of this trend line as well. It's like Euro USD. We have to break out of this trend line before I can say we're going to go to 111.40. This is going to pose some resistance. This here is posing resistance. If you look on the smaller time frame, look at this. So this is that equal leg completion, okay? That A to B equals C to D completion, and we formed bullish market structure and just had a very, very nice rally all the way up to the top of that trend line. When we got to that trend line, look what happened here. And this was all over social media, people playing this here for a quick day trade last, I believe it was Thursday night that this occurred. But look, we had a break in market structure right here. Break, retest, boom. Right down to some old highs. Old highs being turned, or old resistance being turned support. And one of our analysts, Skaggs, issued a trade that could have, I mean, you 40 to 50 pips in profit here. But he also mentioned, and I've also mentioned, this is a long-term analysis, okay? So if it's going to go down, it's going to take a little bit of time. But take a look here. Something that's interesting is when we formed this market structure, we formed this leg here, formed this lower low, formed this high, and now we're forming a lower high. And so with that being said, I would like to see a break in the trend line before we get a rally up to the 115.50. If we break the 115.50, or if we break this trend line, we could see 115.50, which is just the next market structure area in line. If we decide to keep going down and play the market structure on the lower time frame, I would just look for a test of the trend line at the bottom of this channel once again. And equal legs comes on this right here, on this move right here from A to B to C. Equal legs comes out right around 108.20, which is the recent, well, hold on a minute. Okay, hold on. I don't have Fibonacci extensions plotted. Let's plot those right now. So if we get another move down, equal legs comes out way lower than 108.20, around 105.50. So like literally 1,000 pips from our upward target or our lower target. But as of right now, guys, it's actually more. I mean, I'm waiting. Okay, if we break lower here on USD JAPY on 112.10, then I mean I'll be pretty bearish on the dollar yen. If we break up above the trend line, I'll be fairly bullish, or I'll be pretty bullish, because I mean we broke the 112.20, which is this daily high, which is a daily market structure area. If you look, this is a daily rally, lower low, lower high, lower low. We broke that. We formed a higher high. And now, remember, if we do go bearish, that could be just a bearish leg down to form a higher low. Why? Because it's just a bullish market reversal. This is something that I teach in the Big Bang Theory and partly in the Master Course. We break out, which is a free course, by the way. So you break out, you form that higher high. You got to form that higher low. This is not bullish as of yet. This is suggesting that buyers are in place, but buyers also have to support it on the downside as well. So that higher low could come at any one of these possible market structure lows that are marked out, or that I would mark out if we do go bearish, okay? So it's just a lot of waiting. There's a lot of scenarios that could play out. So we are going to wait and see what happens, but we're going to be patient and we're going to wait to capitalize. With the French election, if Macron wins and the EU gaps up, this is going to go down, and what you'll see happen is this will gap down below here, probably attempt to fill. If it gaps below here, it'll probably retest this low and then we'll keep going down. I don't know if these gaps are going to get filled. It's once again, it's election BS that I don't really care for. It just kind of gets in the way, in my opinion, and it's a waiting game. We have to be safe in the markets. We have to be careful with the fear when we have gaps that are coming of potentially 100 to 150 pips. So that's something that we have to be careful on, okay? So with dollar yen, if we break above the trend line, possible rally up to 115.50. If we keep going lower, we could be going lower possibly to see a higher low be formed to continue upwards. Oh, excuse me. So Aussie dollar. Aussie dollar was by far the all-star trade. To all you free members who didn't get to see this, we had our analyst Sean and me partially. We're calling AUD USD basically just on pure basic price action, and you're going to hear me say that a lot because people they make trading so advanced, and it doesn't need to be. And we've stuck to price action now for years, and it continuously is working. But basically, what me and my friend Sean were saying is we have our downward trend line here. We have bearish market structure from the top of this range, and we held this low. Okay, formed a higher low actually, tested 76, came down, and what happened was we said if we broke this low, this bearish swing low, we would look for a pullback and then a decline. So what happened is if we, not the 660, whoa. The 660 minute is a thing? Wow, that's weird. Anyways, I'm sorry about that. But anyways, as you can see, we had that occur perfectly. We broke this low here. Okay, it actually looks better on the 60 minute because you can see the entry better. Look, we had a swing low. We formed a reversal low right here. Okay, higher low, lower low, higher low. Boom. So we broke this area over here. We broke this area right here. We are still bearish. Why? Because we came off the top of that weekly channel. We are sideways on the weekly, but on the 4-hour we have a nice trend to play. So what happened is we were looking to form the higher or the lower high on this trend line. What happened? We form a higher low right here, so this is bullish. Higher high. We break that higher low and form a lower low right here. So now we're bearish. We have a bearish signal right here. We retrace and then boom. We called this short. It was worth over 100, I believe, 160 pips that it produced. All in all, 170 close to. So that was a fantastic trade. Almost worth. I think it had a 1-to-6 risk to reward ratio. To all you free members who haven't been able to hear me on my video lessons talking about risk management and things like that, this is a perfect example of a trade that can make your week. Or make 2 weeks, that can produce 2 weeks worth of returns. I go over in the Big Bang Theory and Elegante FX Master Course how to setting goals, or I don't really go over it in the Master Course, but setting advanced scalable goals. All right, and what I do is I have a goal of returning 1% a day and 20% a month, average. Okay, so as long as it averages out to that, then boom, I am fine. So look. My entry, let's say my entry wasn't even perfect on this short, so we go here, break, I short here on the retest with this bearish hammer candle right here, and let's say not even that, I go a little bit lower, and when I see prices declining like this, okay, I put stops 10 pips above the opens and closes on these candles, so 20 pips just to round it out. That's a good number. Back down to the low is a 1 to 4.35 risk to reward ratio. Down to the Fibonacci extension, which is usually my first take profit, the equal leg move, would have produced, oh shit, that's not what I wanted to do, would have produced a 1 to 5.86. So if I put 2% at risk there, if I had put 2% at risk, I believe, hold on a minute, I just got a notification. Alright, it's confirmed Macron just won the French election by 31 to 39. It was a 31 to 39. You might hear some, sorry about this, I'm literally looking at the results live right now. Macron just won 61 to 39. So Macron will be the next French president. So he won. I mean, Macron won. So it looks like we're going to get a gap up, which is good for any of you people who are in dollar yen shorts from that blog post. Depending on decided on if you took it, because obviously we weren't telling you to take it. That was not investment advice. None of this is. But we just like to tell you what we like to show you how we like to do our things, and we let you go and make your own decisions. But so if you're in an EU long from this retest, you're going to be a happy camper most likely. If you're in a pound USD long, you're going to be a happy camper most likely. So it looks like it's turning out to be a freaking great Sunday night. I could not care less about who is the French president. I'm obviously not going to talk about my political ideology and my political beliefs on a webinar. It's obviously not an appropriate area, but appropriate platform to do it on. But anyways, back to what we were talking about. Is this AUD USD risk to reward was 1 to 5.86. So if we multiply, if I were to risk 2%, which is what I talk about as my cap out on risk on one trade, times 5.86, I would have made 11.72% on my account. So if I took this trade last week, it was earlier last week, I would have been done. I mean, talk about freedom. Not only that, but I wouldn't have had to trade the next week either. I wouldn't have to trade this week, okay, because of this one AUD USD trade. That is called quality trading. You do not have to trade every day, 3 times a day, and scalp the markets to make millions of dollars. Most of the people that you see, I have no idea what that noise was. I don't know if you heard that noise, but it's creeping me out. But anyways, you see most of the people on social media, and I'm not going to speak for everybody, but most of I would say 80% of the accounts you see on social media are cryptocurrency scalpers, not traders, cryptocurrency scalpers, and they advertise, and if you trade that way and you make a lot of money doing it, that's fine. Like that is fine with me. I'm not going to hate on someone who's a profitable trader, okay? But it's not. What I'm saying is it's not the only way out there. Day trading is not the only way out there. This would have taken. I think this is a 2-day trade right here. This would have been 2 days that you would have been holding AUD USD, and it would have definitely paid off. 2 days, and now you have 10 days of freedom basically because you just made 11.72% on your account. So to any of the people who got in there, good work to Sean for calling that. It was all called way early, multiple days before. It was just a price action trade straight out of the Big Bang Theory, straight out of Sean's workbook and everything. So good work to anybody who got into there. But with AUD USD as of now, with the new projections, this is something that looks kind of reversal. It looks exhausted, if that makes sense. I want to get rid of these extensions. Let's clean up this chart here. It looks kind of exhausted, and what I mean by that is actually, let's go back down to the 4-hour now. So we have this bearish momentum here, and we came down, and we formed lows. So what we're looking at now is a possible retracement, and then a decline. But I'm looking at a possible decline, possibly to at least around 73.30 maybe. We're coming up close to retesting these swing lows down here that we formed, which has a 38.2 smack dab in the middle of it. If you look at that Bollinger Band and the 20 EMA right here, which is in the middle of the Bollinger Band, they are all pointing down steeply, but we'll have to see what happens here with the French election. This won't be as much of a gap as as other pairs will have, but remember guys, I just look for tests of swing lows from market structure. So if we break one market structure low, I look for the next market structure low. Not every single little point of support and resistance that under the moon. So right here, 73.30 is that next area right there. So I think if we continue to move down in a bearish formation, let's look at 73.30. I think 73.30 is definitely an appropriate target, but as of right now, that's not something I'm really stressing about. Just with this trade, it was fantastic. I might even remain flat on AUD USD, just because if we look at the weekly, let's look here, guys. We have this sideways range that we've been within now since for over a year. We've been in this range for over a year now on AUD USD. So and we actually stay within the top half 90% of the time. We've only touched the bottom twice, whereas we've touched the top once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, 8 times, 9 times, 10 times, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21 candles have been to have touched the top of this range, and only 3 have touched the bottom. So it shows that, I mean, that for some reason we are unable to get down to the bottom half of this range. But if you basically look right here, kind of where this support is, you can see, like, right here is kind of, you know, where we've been remaining in with this box. If you see how most of, like, literally 90% of our or like 80% of our price action has been up there, and it's been sideways. And look, we broke out here. So I think that's just more bearish momentum suggesting that we could possibly see 73.30. Okay, so I'm going to be looking for sells, and I'm going to be looking for sells until we break. We would have to break 75.50 before I would even consider, you know, going into any buys again, because we are bearish until we break that high. Okay, basic bearish market structure trading. All right, NZD USD, guys. I don't really mess with this pair anymore. It's just, it frustrates me. I don't think it's confusing. You know, if you want to trade it, you can, but I don't think. I think there's plenty of money to be made in euro, pound, dollar, yen, or Aussie dollar. USD CAD is actually pretty interesting right now, because as you can see, so look. Back, like I was talking in the last, I think, the last weekly prep webinar, that, oh, hold on. Ooh, sorry, I thought I had to sneeze. I mean, this pair was so easy to play. It was basically just buying all the time, and it was so easy to play, and we broke this high, okay? We broke this double top here, which is very bullish in my opinion. So we have a bullish market structure right now, and it's formed based upon these lows, okay? So we actually have bullish market structure all the way from over here. So we have a low here. We didn't form a higher high till here, so that's going to be a lower low right there, or a higher low as well. Higher low as well here. We didn't form a higher low till about there. Broke out. No higher high. No, these don't count. I'm not counting these. And I am going to have to count this just because it's a major, I mean, it's right in the midpoint there, so that'll be an easier, I mean, it'll be definitely a good reference point, sorry. And I'll round these off here in a little bit. But so we broke out of these highs, guys, and remember something that I once again teach in the Elegante FX Master Course, which is totally free to you. You should watch it if you can, or you should definitely watch it just because you should. What I'm looking at here is we formed a nice bullish range right here, all right? And we're coming close to retesting these highs right here that we broke out of. We hit the equal legs on this range right at the 100, and we came down. Those are great reference points, Fibonacci extensions. Maybe I should do a video lesson on that for the private members so they can see really why I use them so much. And what's important to remember here, guys, so look, this entire rally, we were going up, so we have our origin low here. Let's mark these higher low. Higher low. Higher low. Higher low. Higher low. Higher low. So this is important, okay? Because these are our lower time frame market structure areas. So we're forming this pullback, and we're coming close to retesting these. Remember, this is that daily old resistance, major resistance turn support, and we formed bullish market structure here on the 60 minutes. So we broke this low. Okay. Well, actually, this is also a swing low right here. Okay. So we broke this low. Tested this one, broke this low, tested this one. If we break this one, we're going to test this one. I think, but we have a 38.2 Fibonacci area right here on our daily time frame, and its old resistance being turned support. So I think there could be lots of bullish action here, or at least consolidation down in that area. I'm already on the 60 minute. So these are all of our lower time frame reference points. These are our higher time frame reference points. I need to make these red. Nope. I like higher time frame. I like to be color coded, just a little bit more organized for you guys. So those are our higher time frame reference points, okay? And then these blue ones are our lower time frame reference points. So I'm going to be watching the 60-minute. There was a decent short opportunity up here, which is counter trend, but it was a good opportunity. But I didn't get to catch that trade, anyways. But as of right now, we are in pullback fashion. So I'm going to be waiting for that higher low on the daily. Okay. So we have our right here. So until we break this low on the daily, I'm not going to be reversing my overall bias. You know. So until then, you know, it's once again, it's patience and it's a waiting game till I get some kind of signal that we are going to go up. So, but something I want to tell you guys is if you look here, let's delete this too. I was just looking at some stuff earlier. If you look here, this is like straight down. So we don't have much of a market structure area to go off of in terms of projecting where we are going to reverse. And what I mean by that is, you know, we form this lower time frame market structure, and when that breaks, I see a continuation in the higher time frame market structure. That's kind of my theory. It's not mine. I didn't come up with it, but it's something. It's just a basic market structure tool. It's not basic. It's actually pretty advanced for market structure. But that's what I like to use in terms of looking for reversals. And as of right now, it's just straight down. But remember, guys, on the daily, we are bullish. So if we look, way out, let's just go on the daily. You can see that, we've been bullish for a while now. Back here was a little bit iffy, and then boom, we broke out. So as of right now, we're in that pullback phase. But look out, because since we broke this area, we don't have many areas to look at except for, I believe, the 140, okay, the 1.4 on USD CAD. I think 1.4 could be in our sights if we continue upwards and break this high and show bullish momentum. All right. Let's go over gold and oil lastly. This is about 40 minutes, about up to our typical weekly prep time. So here's what we got with oil. Once again, a beautifully called trade on my part. I said, hey, if we break this trend line, which we did right there, we're going to hit 47, and boom, we hit 47. We broke through 47 like jello, and we declined a lot. So we're kind of in that pullback phase as of right now. Let's go back out to the daily. And the whole reason behind that, guys, is remember what I told you. I said, okay, each time we've bounced off this trend line, we've actually formed higher highs. So bounce, higher high, bounce, higher high, bounce, higher high, bounce, lower highs. So there were sellers here that stopped us from going higher. And then we came down to the trend line and we consolidated. So if we look at that consolidation here, we broke, and I accidentally said, okay, this might be it, but that was my bad because we didn't break and close on the daily. We did on the 60-minute, but this is a daily trend line, so that had no effect in my opinion. Came back up, consolidated more, broke, closed below. Where did we close? Oh, shit. Sorry, excuse my language. So, boom, break here, and then boom, we head down to 47. There was a nice opportunity here. We broke through 47, but we stopped right in the middle here, okay, before we could test 42.20. So here's what I'm looking at. Depending on what happens here at the retest of 47, I'm looking for a possible continuation downwards towards 42.20. So if I zoom in here, we broke here. This is the daily level. This is the level we broke. So if we retest here, which also kind of has a 38.2 right in that area, we have some resistance here, old support, an old double bottom broken being turned resistance. So boom, you could expect a possible decline down to 42.20. If we break up into 47, we could test the bottom of this trend line again, and we could be retesting that trend line. This is going to be all messed up. And we could retest the bottom of this trend line again. But anyways, we caught that oil trade. That was a great trade. And as of right now, guys, look at this. We have this boom, lower high, and a lower low. We do have a bearish market structure, a bearish market as of right now. So I will not be bullish on oil again until we see a break of 53.80. And if we break 53.80, A lot of people are waiting for the oil to test 60, okay? But what's difficult, you guys, is we have you know, President Trump and the new White House administration. You know, when we're dropping bombs and you know, in near large places in the Middle East, just where oil is just hugely affected in terms of war, that can make a very, very, very big impact. So as of right now on oil, I'm just going to remain flat until we see a test 47. If we test 47, we could come down to 42. If we break that, we could head back up to the trend line. Just remember that. That's kind of my whole outlook on oil as of right now. All right. So nope, not going to look here. Lastly, okay, with gold. So gold is, as you can see, guys, if we have bullish market structure here. We have origin low, higher high, higher low, higher high, higher low, higher high. And as of right now, we're in that pullback phase. So we're looking for another one of those higher lows to be formed right from right, like we did here, and we have a trend line here that we may reach for. As you can see, we pulled back down into the 61.8 area, and also in this area is an old swing low right at 1226.50 or 1226 or 1227 on the dot is an old swing low right back here on the lower time frame. With this market structure right here, there's smaller market structure. That's one of the swing lows down in there, and you can see we've begun to range. So what I'm looking for is it's just a basic market structure and basic range plane. If we break out and retest and we show bullish capabilities, I'm going to look for a long back up to 1295. If we break below and retest at 1226.90, I'm going to look for a test of the trend line, okay? And what that's going to tell me is that we're still not ready to go back up. It's just that basic. And what I like to do is, just in case, to be sure that if we did break out, it wasn't a bull trap, I would watch the Bollinger Bands and make sure that the Bollinger Bands were expanding with price at the same time. Because sometimes that can definitely set it off and make a huge difference in terms of the breakout. But if we break out of this range, guys, just look for a possible test back up to 1295.20 area. And if we break down below it, then look for a possible test to the trend line, and just know that we are not it's just not ready to break out yet. All right. All right, guys. With that being said, once again, thank you all for hopping on and checking out the weekly prep webinar. This comes at you every single day, or every single week, Sunday evenings. And once again, it's totally free to you guys. I see it as a chance to connect for free and help out the members and everybody, just so everybody benefits. And remember, this is going to be coming at you in a webinar style. You know, it's going to be actually live with you guys, so you can ask questions whenever you need to. So with that being said, thanks again. Keep coming on. Keep trying to study. Keep learning. Just a quick reminder, there's a free webinar that we are holding tomorrow night, Monday night, at 9 o'clock Eastern Standard Time in the evening. And it's going to be an introduction into Elegante FX, what our mission is, what our products are, everything we offer, and how we can cut your learning curve in half in terms of trading and help you become a self-sufficient trader. But once again, that's all up to you, and if you make the moves on your own, if you show up to the webinar, and if you eventually do become a part of the team. But seriously, don't miss it. This is a totally free webinar to you guys. We want everybody to be there, and there's no reason. I mean, it's free to you, so I mean, there's absolutely no reason why you shouldn't show up. So if you plan on going to that, which you should be, I'll see you guys there tomorrow night. If you don't make it, I'll see you guys on our next free video lesson to you guys, or on our next weekly prep webinar next week. With that being said, everybody be safe with the gaps that will be coming up with the French election that just ended with a Macron victory. Everybody have a great night, have a great, safe week, and I'll see you next time. Thanks, guys.